Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I talked about some of the companies I would like to add to my portfolio in going forward to 2023. And one of the companies that I actually like and I'm thinking of adding in the next possibly 2 months is this company, Automatic Data Processing. Okay, this company ADP provides a lot of the human basically capital side of things. So what they do is they work with other companies. So a company that has employees will then hire this company, and what they will do is they will give them the software that this company needs. So they operate in 2 segments, so employer service and professional employer organizations. So that includes things like the strategic cloud-based platforms. It includes human resources, outsourcing solutions. It also includes payroll, benefits administration, talent management, HR management, workforce management, insurance side of things, retirement side of things, compliance services, as well as basic integrated HCM solutions, and so on. So they work with loads of different companies to take care of everything to do with the human resources side of things. Okay. So currently this company is in technology sector. It's sometimes you see it in the industrials. I'm not sure why. Maybe the business model has changed over the last whatever years. But yeah, share price right now $243 per share, EPS of $7. In terms of market cap, $102 billion. It has a wide economic moat. Beta is quite low. PE is quite high. And when you look at the average for this company on the last whatever years, it is actually quite high. So when you look at the price to earnings, the current price to earnings of that, and then average for 31.9. So that is basically where it's at right now. And that's basically where it has been the last 5 years on average. The industry basically is about 26.6 and the market is just about 20. But this company is trading way higher than that. And when you look at it from forward PE as well, it's actually still seems a little bit expensive. Price to free cash flow also seems okay-ish, okay, but not as cheap as the market. Price to free cash flow, okay, that's free, and price to cash, the price to free cash flow is slightly more expensive as well. So looking from that side, it seems a little bit expensive, but on the sector, when we look at right now, the PE for the sector is 25.51 or so, okay. In terms of dividends, it has a 2% dividend yield. Latest increase was 20%, 5-year growth rate of 13%. Dividend growth rate is 47 years in a row. So soon this company will be, right now they are Dividend Aristocrat. Soon they will be a Dividend King. So when they hit 50 years, basically Dividend Aristocrats are companies that have increased that dividend for 25 years. Kings 50 years plus. Payout ratio 58%, so that's a sweet spot, that's fine. Dividend safety of 97%, so the highest you can get is 99, so that's absolutely fine. They have excellent free cash flow that they can use to buy back their own shares, to pay you dividend, to pay off debt, okay, to buy other companies and so on, or to grow the business if they wanted to. So there's a lot of things they can do with that money, which is very nice. Profit margin right now we're looking at about 18%, operating margin of 23%, return on equity 80% right now, which is absolutely amazing. In the last 10 years, they've returned almost 18% to the shareholders. Current ratio is basically 1, which means basically in terms of the 12 months, they have enough to actually pay off that, basically, if they have a debt and so on, for any liabilities basically. And then when we look at the valuations next year, they're expecting about 11% growth in terms of earnings, and then 15% every year for the next 5 years. Right now, $243 per share. According to Simply Wall Street, it's $213 per share is where it should be. It's 16% overvalued right now. Fair valued for Morningstar, it basically is right now premium about 8%, if you like. 228 is where their fair value price is. According to TipRank, is slightly different. 255 is basically what they're saying, and that's about 3%, 4% and upside from here. But they said it's a hold right now, so they're not recommending it as a buy. That's TipRank, but I think that is okay. But if it comes down maybe another 5, 6, 7%, I'm definitely going to look at this, possibly add it to my portfolio. So in terms of total revenue in the last, basically since the last 4 years, we're looking about 13.6, then to 14, then 14.5 to 16, and right now 16.3 in the trailing 12 months. In terms of cost of that revenue, from 8 to 8.4, 8.6, 9.4. So it's gone up a little bit there. I'm not sure what's happened there, but then now, right now, we're looking at about 9.6. Okay, 5 in terms of gross profit. So when you subtracted these two, you're left with 5.5, 5.6, 5.9, 6.5, and then 6.7 right now. So they are actually increasing their gross profit, which is quite nice. EBITDA, when we look at this, okay, you're looking at 3.5 to right now 4.4, which is absolutely nice. Free cash flow from $2 billion to right now 2.1 to 3.1 in the last 4 and 5 years. Okay, shares outstanding, they are buying back their own shares, which is quite nice. So the company is buying back their own shares. They have increased their revenue totally in the last whatever years. They don't have a lot of debt. From Sharia compliance side of things, I'll show you in a second, they have excellent free cash flow. They pay you 2% dividend, which is also, it's been increased every single year in the last 5 years, in the last 47 years, sorry. And the latest one was about 20%. So overall, although the company seems a little bit pricey right now in terms of price to free cash flow, when you look at the 5-year PE on average, it has been trading above 30. So it is basically kind of valued right now, if you think about. Now, in terms of Sharia compliance side of it, this is one of the reasons I'm attracted to this company right now. In business side of it, 100% no issues, which is nice. 3.8 in terms of interest-bearing debt, and then interest-bearing securities is only 1.31. And that is one of the reasons I'm thinking of adding this company to my portfolio for the long run, because I am sick and tired of just looking at my portfolio every couple of weeks and whatever, and looking at some of the companies I own and just saying, you know what do I do with this company? What do I do with this company? And so on. So this is probably one of those buy and forget kind of companies for the long term, inshallah, if they don't actually change anything else. So there you have it. That's the company that I'm looking at right now. Is one of the companies. So what I will be doing is every single, I don't know if you've seen my video, basically 2 videos ago, where I talked about my watch list, and I've talked about companies that I will be adding to my portfolio. This was one of them. So I will be doing similar sort of videos, kind of short video, to summarize where the business is at right now and why I'm attracted to that company, and give you the numbers. Every single thing you see here is not me making it up. It comes from different websites, from Morningstar, from Yahoo Finance. So I kind of gather all that together to kind of help you guys and share it with you, and share it with, obviously I'm doing this for me, but I'm also sharing it with you. But there's a lot more to it. So once you've done this, you need to go to the company website and go and read the 10K. Understand how the business makes money. I've said it here. Oh yeah, it talks about blah 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 blah, right? HR management, workforce management. Who are their customers? Who actually uses this company? Go and find out. Okay, those are the kind of things that you really need to do, inshallah, in the long run. Okay. Final thing I want to talk about is, one of the brothers recently asked me a question about how I actually managed to do this in terms of where do you get the money from. And I'll be honest with you, every single penny that you see here comes from my salary, day-to-day work. I work my butt off every single month to actually earn that money, and then I put it into basically into the stock market. So recently I haven't put as much as I basically was doing before, but like I said in one of the videos, or last videos, I still have £8,000 to add before April the 7th, and inshallah the plan is to do that. Okay, that means I'm gonna have to be a little bit frugal, maybe going forward in the next couple of months, or maybe just to add a bit more. But I'm definitely not touching my overall the emergency fund, or the money that I'm actually saving for something else. Okay, I've got other plans and stuff, inshallah, but this money is money that I've worked for. If you work and you earn, say, £10 like extra every single month, listen, put that to work. Okay, just put that in. It doesn't matter how big or small. This, because of where I am right now, I'm 35 years old. You know, I've got, alhamdulillah, good job. I've got a family and all that stuff, right? This is not just overnight money. This is money that I've been saving for a long time, and I'm just adding it to the market just slowly for the, you know what I mean? It's not just something that I've just inherited all of a sudden. Okay, so I've got a bit of money saved, but obviously that money, this every single penny that I add comes from my work. I've not been paid anything, whatever. So what I'm trying to say to you guys, if you don't have £1,000 to add to the market every single month, then what do you have? £5, £20, £30? Then do it, add it. Okay, like genuinely, the reason I started this portfolio and this whole YouTube thing, I don't make money out of this YouTube thing. I'm trying to share my journey and to show you what is doable. Because I do have friends that said, "Ah, no, it's not gonna work. You're gonna lose a lot of money in the market." 3 years later, I'm still fine. As you can see right now, if I liquidate everything that I have, I will make £2,800, right? I'll take all my 60,000 plus, okay, and I can do something with that. But the point I'm trying to make to you guys is just do it. Start it now. Don't wait. Even this company, the Trading 212, they taking customers still. Okay, there's a lot of you that have actually used recently some of the links that I've got. So if you go to the link in the comment section, click that link and open up an account. You might be on the waiting list for maybe a week or two, whatever, a month, then you get you in, right? Open up an ISA account if you live in the UK. If you live in somewhere else, basically open your in the US, basically, okay, any tax haven account. That's it. That's all you need to do is start. That's the most important thing. And then once you start seeing it growing, it will become addictive. I promise you, that's how I started. I started and it just became addictive. Week after week, I've been adding to it. I've loved doing this. Okay, I get excited, and that's what I want to share with you guys. Okay, so anyway, I'm going to stop the video right there. Have a wonderful day. Assalamu Alaikum.